Hey guys, welcome back to another video. And you might know that there's actually earnings season coming up in a few days here, and actually a few companies are going to have their earnings even on Monday. Now, a lot of the main companies that I'm watching are big tech names or other type of plays, Target, Walmart, etc. But one of the main plays that I think can actually move the most and have some of the craziest reactions here as a result of their earnings are going to be banks. And that's why I really want to talk about what three banks I'm watching for this earnings season and for what reason, as well as what I think their price could possibly do over the next few weeks and depending on their earnings report. So, the first one I want to take a look at here is JP Morgan Chase, and they're one of the leaders in this banking industry. Now, unlike a lot of other stocks, this one is looked to for direction. So, Bank of America or Wells Fargo, they really look to the stock for direction. And it tends to be true that when JP Morgan is green, Bank of America is green, and also, etc., the other one, Wells Fargo. So, it's always going to be great to keep an eye on this banking stock in case you want to know what is happening with the industry as a whole. And right now, what I'm seeing is that they were kind of setting up for this triangle breakout pattern, a bullish flag. And unfortunately, they broke out below and they've dropped all the way to around $91. Now, I did trade a lot of this upside back to 101, but I regret not being in the trade for longer. So I really want to show you guys what the future of this company is going to be in order to kind of understand what might happen during earnings. Now, you see this purple rectangle that I have set up here, and for what reason do I have set it up? Is because you can see that this is where all the last breakouts following this price around $100 have went to. Now, in a couple of my last videos, I explained how these round numbers, $100, $200, they really become a support or resistance for a lot of traders because it's a great mental number that a lot of people like to see on a stock. Like, for example, Apple at the $500 or Tesla nearing 2000. So a lot of the times when these stocks start to get near these round numbers, they really become a key level of support. And you can see that that's kind of what's happened here with JP Morgan Chase. Now, this $100 level has hit once, twice, three times, four times, five times, etc. And you can see that every time we've been around this price, there's been a lot of either consolidation or a large bounce to the upside. And that's why I'm really excited about what could happen coming into next week and coming into earnings for JP Morgan Chase. Now, the price exactly that I'm watching for a breakout is whether or not they can enter into this $100 rectangle at the bottom and potentially leave the $106 price to the upside. Now, if they do go above $116, or sorry, 105 and 106, then I think there's no doubt that this stock will go all the way back to their all-time highs around the 115 to 120 range, because that will probably mean they had really good news during earnings. Now, if they don't break into this triangle, or potentially they break in but immediately pull back out, then I'm looking for another support around $90. Now, as you can see, that's where they had their support. That's where they had this support here. And a lot of the time, it's where they had periods of consolidation in the past where stocks kind of trade sideways. But that's neither here or there because we're looking at what's going to be happening this week. So what exactly do I think is going to happen? Now, I think there's going to be a little more run up to their earnings where they potentially break into this box. So if you are still in a trade on this company, I would recommend to hold for a little longer, just a few more days of next week, and watch very carefully as to what's happening, whether the price is going up or down, because this could potentially signal a trade where you're going to be able to know if they're going to break out of this box to the downside or if we're going to potentially continue to the 120. So that's why it's so critical to know what's going to be happening with the earnings and to really watch this stock on a daily basis if you are in any sort of trade, because it's going to be very volatile over the next few days as we see whether or not this rectangle holds up, or if we're going to test these prices and then fall back down to 90, such as what happened a few weeks ago around this area here. So another company that I want to talk about as well is going to be Bank of America. Now, this is my second favorite company in this sector because they can move like crazy. They can become very volatile, but at the same time, they're a good play to just hold your money in on. And they don't really tend to move a lot on a regular basis. But when we do have these earnings moments, they like to really run up. And like I said, JP Morgan Chase JP Morgan is the industry leader here on the stock market for these bank stocks. And that's why I want to show you this critical moment here, which is the same as the breakout moment on JPM where they broke to the downside. And you can see that that's exactly what Bank of America did as well. They broke down all the way to one of their previous supports around 23.30. So like I say, you can really know what's going to be happening with a lot of other stocks based on just what's happening with JP Morgan Chase. So that's why I think it's such an exciting opportunity. Now, two things I do see on this company that are really interesting is going to be this right here. They have a long-term support around this $23 level. And what I'm seeing as well is this top support or resistance, that looks like it's kind of closing in. And what that means is that they could potentially see maybe a break to the upside like crazy, or they could see a lot of nice consolidation here and then potentially a breakout to the upside. And why do I say that? It's because they are also having earnings. So they're going to be moving very volatile. They're going to be doing something similar to JP Morgan Chase. And with a lot of these bank stocks, obviously we are still in a recession or something that really signifies a recession with the lower job numbers, etc., with a lot of economic factors being crippled, then we're going to see a lot of these bank stocks continue to struggle to potentially do as well as they did in the past. Now, a lot of times I don't really show this because it's kind of a more advanced indicator, but the Fibonacci retracement tool shows you where a lot of these stocks might retrace to, and you can see that exactly where exactly where the Fibonacci shows us is where the stock has really been moving to. You can see that it went all the way here to the 22% retracement level. Then we had a bounce back out all the way back up to this one right here, the 0.236, and then right the way back down where we traded sideways between 618 and 382. And the numbers that I'm reading are here. A lot of these you have to know specifically what the probability of them retracing to this level is. So it's not just as easy as pulling this up, because you can see that unless you know where the probability is into the future, you're not going to be sure what's going to happen with the stock. Now, like I said, I'm pretty confident that they're going to bounce off these 0.5 right here, and they're going to go all the way back down to maybe this 2240 or potentially the 786 right here. But I don't think they're going to break any lower because, like I showed you, they have this long-term resistance or the support, around the 2320, and I think that's going to hold up for earnings, as I don't think we're going to get any sort of substantial news that's going to really push this company to the upside or the downside for a very long period of time, more than just the regular trading already has. Now, like I said, a lot of people are waiting for some good news with these banks. They trade them on a daily basis, but they just haven't had the volume that you want to see from a position that could potentially gain over the long term or even in the short term on a lot of these times. So as always, guys, just keep a close eye on these news. Another one that I want to talk about is Wells Fargo. Now, Wells Fargo is probably my least favorite of the three. And at the beginning of the economic downturn, I was really trading this company a lot on a daily basis. You can see they were having some good swings to the upside and downside over the last months of time. But as we've come into the last weeks, you can see that they have really become a lot less volatile and a lot less worth it to be watching on a daily basis. Now, a $1 swing, yeah, that's great, $3 swing, but that's not exactly what I'm looking for to make some monster profits here. And especially the time that it takes to look at each one of these charts, you can really only focus on 10 to 15 charts. So if you put this chart in on your daily watch list, on your daily charts that you check every morning, you're going to make yourself less effective when you're trying to trade a single moment. There's only really going to be one day of movement for this stock, and you're not looking for trades to the upside or downside in a long run, in a week setting, a month. You're just looking for that one day where they might go up $1 or $2, and it's not really worth it to try to hit it like a lotto game. You're just not going to hit it that one specific time, and instead you're going to waste your time looking at this every day. And that's why I don't really recommend Wells Fargo. You can see that they haven't really broken out or gone up or down or anything, even related to the JPM trade. There's nothing that shows that they're following JPM here. So it really just shows like they're just sitting at these levels at around, $25 or below, and they haven't really broken above in a long time. So if we do have positive earnings, if JPM or Bank of America does break to the upside, I'm sure we could see some movement on Wells Fargo, maybe if they come out of this 25 level and to the upside potentially. But otherwise, I think they're going to just continue trading at these levels. And even if we get a bad news and a trade to the downside, the most that we could really see is $2 to $3 of losses. I don't think that's going to be enough to justify an options trade, especially when so many other people know that they don't move often and are kind of cautious of moving in on new positions. I don't think it's going to help for your premium price on options or anything in general with the company. It's just not a good investment in my opinion, or at least until we get some news to the upside. So like I said, Bank of America, really watching if they break back into this channel or if they continue trading in this breakout triangle, the flag that I was showing you guys. If they do break back into the channel, look for them to reach up to 27 and then see some resistance. Now, another one, JPM, like I said, this is the market leader. What happens with JPM is going to be really significant for what happens with the other stocks. They just had a breakout pattern where they broke to the downside, found resistance around 90, and even though they've broken out, they're not really doing the same triangle thing as Bank of America, but you can see that they might have even broken out of there. So shows a lot of good signs to the upside, but at the same time, they have to prove to us that they can break out of this 106 before I'm willing to make a trade to the upside or downside. This will still leave a lot of room for you to trade to the upside and especially a lot of room for you to trade to the downside. So I'm not really afraid of waiting $1 or $2 and potentially miss out on a trade, like a small amount of trade on JP Morgan, because I know there's a lot better profits to be made when I'm 100% confident of the position. So those are just my 3 stocks that I'm watching for bank earnings. I think these are the best 3. Citigroup is another one to watch, but it's not really, I like it even less than Wells Fargo. That's just my personal opinion, so don't get mad if maybe that's your favorite bank stock. It's fine. If you like to trade one, I like to trade the other. Just whatever you're more confident with is going to be the best for you as a trader. So as always, guys, just keep a close eye on these stocks. There's great opportunities coming next week and the following weeks with earnings. A lot of stocks like to run up to earnings, potentially react volatilely off the news. So just keep a close eye out, guys. As always, don't forget to like and subscribe. Discord link down in the description. It's for free. You can come in there and get my daily signals and plays. So as always, guys, don't forget that too. And thank you for watching.